comes on the back of yesterday's offloading by BHP Billiton of its $650 million Pinto Valley open-cut copper mine in the US. It's all part of this focus on capital management as growth from the boom times wanes and an eagerness to address growing investor appetite for yield, which means dividends. Well, I'm joined in the studio now by Steve Johnson from Intelligent Investor. Steve, welcome.
Hi, Tiki.
As I say, this chase for yield is one thing. I mean, we're seeing it in the banks, we're seeing it with Telstra, but also now this rush of the miners selling assets. Is that the right thing to do for them at this time, do you think?
It is the right thing to do. It was the right thing to do 2 or 3 years ago, though, was to give some of the spoils from the mining boom back to shareholders. It really has been an extraordinary 5 or 6 year period. There's been twice as much money put into mining companies as has come out, despite the boom prices that we've seen over the past 5 years. So the fact that shareholders are putting a lot of pressure on companies to stop wasting this money on expansion and new mines and give some of it back, I think is a very encouraging thing.
You say they're 2 or 3 years late on this. Were there calls coming from analysts 2 or 3 years ago that this should be happening, or was just everybody so caught up in the boom that they would get more down the track?
Oh, of course not. When the boom was at its peak, everyone was throwing money at the mining companies and say, please expand and grow the share price, and we want the share price to go up. It's only in hindsight that everyone wants to look back and say, well, you should have given us more money. But it's something that we have been calling for all along, that you really should be paying out dividends to your shareholders when you're in boom times. And then when the times are bad, is a good time for companies like Rio to be going around and consolidating some of the less well-capitalised miners out there.
Well, speaking of capital management, I'm looking at Goodman Group today with finishing its massive $1 billion equity raising. What was driving the success of that? Because it was successful.
Look, this one really is about yield, and we're seeing it in bank shares, we're seeing it in property stocks, we're seeing it in the REITs. There is just an incredible rush for yield out there amongst investors. I think a lot of the people that are coming off the sidelines after a very tumultuous time in stock markets are looking for the closest thing that they can find to bank deposits. And at the moment, that is high-yielding shares because they pay them dividends every year or they pay them distributions every year in the case of REITs. So anything that pays a good, consistent, regular dividend is being bid up very heavily, and you've seen that in the response to Goodman's capital raising here.
Does this, though, reflect, in your view, a sound investment in what's going on, for example, in the industrial property market or what's going on in banking?
Look, I have real concerns across the Australian economy, and I think there's a disconnect here between the concerns that everyone has about China, which we've seen flow through to mining share prices. You know, they're off a lot over the past 6 months, and yet we're seeing bank shares hit all-time highs, and we're seeing things like industrial property stocks bid up. I think that the flow-on effects from a slowdown in China are going to be a much slower Australian economy, and I think that's going to make life difficult for some of these businesses that have been bid up. So it's really, really important for investors out there to remember that these are shares, not bank deposits, and they come with very considerable risks.
Let's talk about a sector which is really struggling at the moment. In the Fin earlier in the week, there's some awful numbers were published. At least 80 farming operations worth over $1 million in receivership or in some form of distress. And this is a matter quite close to your heart, I gather.
Yeah, correct. I grew up on a farm in Wellington, New South Wales, and my parents are still out there. And I've seen firsthand exactly what's going on in farming lands. I sat in a meeting up in Dubbo with a woman from Rabobank, and she had a book there that she ran through and said, well, you're running a beef farm, you should expect to generate a 3% return on your capital if you run that farm well. And my parents have got debt that's costing them 7.5% a year. And I sat there and thought, well, you don't need to be a fund manager to work out that that's not a particularly attractive trade-off. And we're seeing that across the whole sector. The banks have lent a lot of money to rural Australia. It's bid land prices up, and it's bid it up to the point where...
What's the solution, Steve? Because, I mean, if those numbers are looking like that, clearly, as you say, it doesn't add up. The Cattle Council, I know, is calling for better strategies to help farmers with their lending. The government's put in a loan financing assistance package now, but really, if we're looking down the track, aren't we valuing our farm assets wrongly, given what we're being told about how in the future they're going to be probably the most valuable assets that we will have in Australia?
Actually, I think that argument is what's bid land prices up to a point that's completely unsustainable in terms of the cash flow that they're currently generating. And it's a very, very speculative argument to be saying, well, in 10 years' time, the world's going to be eating a lot more food and therefore prices are going to be up. What farmers need is to be able to cover their interest bills now, and I think that's a real problem. more debt is not going to fix the problem. I think the government's well-intentioned in terms of trying to help farmers through a short period with the higher Australian dollar and the impact that has on farm prices. But ultimately what needs to happen is farm prices need to come down, and we need to get the level of debt down.
Well, it's not very happy news for farming at the moment, is it? Steve Johnson, thank you very much for joining us.
Thanks, Dickie.